I'm Shae Russell from mining.com.au, and joining me today is Simon Wensley, the CEO of Metro Mining. Simon, it's great to see you again. How are you?
Yeah, good morning, Shae. Great to see you too.
It's been a big month of news for Metro Mining, but let's kick off with the most recent announcement, and that is the restructuring of the company's debt. Tell me, what does this mean for Metro?
Yes, it has been a big month, Shae. So look, that's a really important thing that we've just accomplished this month. It's the culmination over quite a long process over the last 3 or 4 months. We've been conducting what we might call a refinancing process, where we've been looking to, since the risk of the company has reduced markedly, then we can then go back out and approach lenders to try to refinance what was, relatively expensive debt when we took it out. So that process has been ongoing. We've had a lot of interest, which was great, from a wide range of groups, private lenders, private debt, some hybrid lenders, and also some high street banks. So it's been a great process. In the end, we decided that the best option was to stay with our existing lender, but under a significantly different structure. So the outcome of that has been primarily a reduction in the interest rate on our debt for the original $30 million senior portion, which came in 2 tranches back in 2023. So we've dropped that interest rate by about 2%. We've also, there was a private royalty in place that we had an option to buy back, and that needed to be bought back before the end of March for it not to then continue ad infinitum. So we also financed that. So it's roughly $11.5 million worth of additional debt, but that has taken out that royalty. So it's effectively swapping one form of liability for another form of liability. That also comes in at that lower interest rate. And the fourth element effectively is this what we're calling a standby facility. We were looking for some flexibility, something like a working capital facility or something like that. And Nabari, rather than a working capital facility, which tends to have line fees, it also tends to have a significantly higher interest rate than a secured debt portion. We actually just said, well, look, let's have a standby facility with a minimum draw. So we've got another $10 million standby facility with a minimum draw of $5 million. And that it gives us the flexibility to, if we do want to spend a bit more money on X or Y over the next sort of few months, we've got that we can call on. So look, altogether, I'm really pleased with it. As you said, it does de-risk the company significantly as we sort of end this operational year this year. We do have that 2-month shutdown period due to the wet season, the monsoon season in Northern Australia. So that tides us over really well and ensures that we can come back in to operation next year with all the work done that we need to do and come in a very strong way. So look, altogether, I'm really, really happy about that restructure.
Now, adding to the financial strength of Metro Mining, earlier in the month, the company announced 2 offtake agreements for 2025 and 2026. Are you able to elaborate on these contracts in some more detail?
Yeah, sure. So look, we're always trying to balance value and risk in the business, and so having a firm offtake group of partners is critical to that. So we last year we converted one company, Shandong Lubei Chemical, into a customer. They've been with us for a year, and they've converted that position now into a 2-year contract from next year. So that's great to sort of see an existing customer, convert into a longer term offtake. And they're a very interesting company because actually they're running a low temperature refinery, which, in layman's terms means that they're not actually getting the best out of our bauxite, but they're still buying it because they like the security of supply that we provide to them. And they're blending it in relatively small amounts into their refinery to blend away some of the Guinean, much higher priced Guinean materials. So that's the first one. And the second one, which I'm really pleased, and which has been a couple of years of really intense work by our marketing and technical teams, is that we brought onto our customer portfolio the largest aluminium an alumina producing company in the world. So Chinalco, or Chalco as they're called, are now a customer for us, and so that's a real feather in our cap, I would say, in terms of having the largest aluminium producer in the world as one of our offtake partners. So they've also signed a two-year offtake deal, and similarly they're looking for diversity of supply, continuity of supply, and a reliable supply partner. So those are the two new customers that we announced at the beginning of the month, and they, in addition to our sort of long-term offtake partner, which is Jinfar Aluminium, who continues to be a big supporter of ours.
You touched on something just briefly in there, and that was about the security of supply. Over the past couple of months, we have been talking about changes in the bauxite sector and how certain international supply couldn't be as relied on before. Has much changed over those couple of months?
Look, I mean, it's more of the same, Shae, really. It's just becoming tighter and tighter out there in the market. The one supplier out of Guinea has had their export license suspended, and that I thought that would get resolved relatively quickly, but it still hasn't been resolved, and so that's still a big drag onto the market. So look, it's getting tighter and tighter. This security of supply thing is huge, particularly for an integrated producer who is not just making alumina, they're making aluminium, and then they're going downstream to make things like Tesla bumpers or iPhone bodies or whatever they do downstream. They need the bauxite up front, right? So security of supply is really, really crucial to these integrated producers. And so what we're seeing in the market is continued price uplift. The spot price for Guinea material has now gone over $100 a ton. So that's a landmark sort of event in that sense. It's never done that before, as far as I'm aware. And then the Australian price, the Australian high temperature price, is also up in the high 80s at $88 on a spot basis. So that's really really sort of demonstrates how tight the market is and how important it is for these customers to have long-term partners as suppliers.
Listen, Simon, this has been an excellent chat. Thank you so much for being here today, and I can't wait to speak with you again.
Yeah, great. Thank you for your time.